Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with the European Session Outlook. We'll start with the North American markets. The GDP annualized came out 1.4% worse than expected at 1.2%. The GDP price index is 0.4% better than expected at 2.2%. The personal consumption expenditures prices quarter on quarter, 1.6 higher than previous at 1.9%. And the core personal consumption expenditures quarter on quarter were as expected at 1.7%. We also had the Chicago Purchasing Managers Index 1.8 better than expected at 55.8, and the GDP month on month in Canada 0.1% worse than expected at negative 0.6%. The US dollar dropped every day this past week, resulting in a 1.4% slide in the longest series of daily losses in 15 months. That said, despite steady tumble helped by Friday's sharp drop, the dollar's fundamentals still set it up as one of the more stable currencies moving forward. After Friday's news and last week's FOMC meeting, rate expectations have dropped, with September seen as an 18% chance and December 36% chance. So most likely no rate increase this year. The Dow and Nasdaq are both sideways, going slightly to the upside today. The Dixie is down to 95.61 from 96.41. Currency pair movements are good. USD CAD 115 pips down, Swiss franc 105 pips down, and USD JPY 275 pips down. Today we have ISM data, manufacturing PMI and prices paid, and also market manufacturing PMI and construction spending. This week is very important due to the fact that we have the non-farm payrolls and unemployment rate on Friday. All right, onto the EU markets. The Euro USD gained 1.75%, the best performing Euro-cross. The Euro-Zones GDP is at 1.6% annualized, and this means that it is growing faster than the United States, which I mentioned is at 1.2% as of the second quarter of 2016. This surprise has turned markets around and has given the euro a considerable amount of fundamental strength. Supporting the rise in Euro USD has been a steady improvement in inflation expectations for the Eurozone over the course of July. The five-year inflation swap forwards, a market measure of inflation expectations, edged higher over the past week from 1.314% on July 22nd to 1.340% on July 29th, and from a yearly low of 1.250. A recent run higher in German inflation data may be influencing expectations here, as energy prices have declined recently. This week's most important event will be the Eurozone's non-monetary policy meeting on Wednesday. All right, on to the UK markets. We had the consumer credit, 437 million, better than expected at 1.837 billion pounds, and mortgage approvals, 884, more than expected. Sterling's will potentially extend its losses in the coming week, as markets are expecting the BOE to ease on its monetary policy and cut the interest rate and introduce more asset purchasing. This will lead the pound into its fourth straight month of decline versus the dollar after dropping for 3 consecutive months. The last month, the sterling weakened with 0.3% versus the dollar after an almost 9% drop in the 2 months before. However, the massive buildup in expectation for a rate cut may give the pound some room for an upward move in case the BOE decides to keep rates unchanged. The FTSE 100 closed at 66.74 on Friday. This week we have the Super Thursday with the Bank of England interest rate vote, the asset purchasing facility. We're going to have also monetary policy statement. We'll have the governor, Bank of England governor, holding a speech, Mark Carney, and we'll have the Bank of England minutes, of course. All right, on to the Asian and Pacific markets. Monday, we had some Chinese data early in the morning. Non-manufacturing PMI for July, 0.2 better than previous at 53.9. Chinese NBS manufacturing PMI 0.1 worse than previous at 49.9, and again Chinese Caixin manufacturing PMI 1.9 better than expected, 2 better than previous at 50.6. Chinese manufacturing contracts while non-manufacturing gains in July. Regarding the Bank of Japan and how they disappointed last week, the Bank of Japan doubled its annual purchase target of Japanese exchange traded funds to $57 billion, but $57 billion, but it disappointed by failing to expand its bond buying program, and the decision to leave its policy rate unchanged at minus 0.1% was particularly disappointing, shifting yields higher at the short end of the Japanese government bond yield curve. In Australia, we're having incoming Australian Central Bank Chief Philip Lowe faces the prospect of nursing a transitioning economy as the government focuses on reducing a budget shortfall to save the country's AAA rating, and economists forecast a Tuesday policy easing. Nikkei 100 is down 100, 250 up today. GBP JPY is minus 300 with a range of 430. USD JPY is minus 277 pips. Euro JPY minus 213 pips. Australian dollar JPY minus 115 pips. And US dollar Chinese yuan minus 328. So Tuesday, as I mentioned, in Australia, there's going to be an interest rate decision, and the forecast is to be cut to 1.5% from 1.75%. And on Wednesday, we'll have Japanese monetary policy meeting minutes. All right, on to commodities. The Baker Hughes oil rig count came out. The number of rigs drilling for oil in the US last week increased by 3 to 374, the 5th straight weekly rise and the 8th increase in 9 weeks. Gold prices rallied sharply on Friday, ending the session close to a 3-week high after data showed that the US economy grew at a slower pace than expected in the second quarter, prompting market players to roll back expectations of a rate hike from the Fed. Also, oil futures ended Friday's session slightly higher, rebounding from bear market territory as investors went bargain buying after prices fell to the lowest level in more than 3 months amid persistent concerns over a supply glut. Crude oil held steady to stronger in Asia on Monday. The S&P 500 index had a range of 15 points. It's up to 2175 now. Gold had a range of $27 at $13.49 now. Silver had a range of 46 cents at 20.54. Now, crude oil had $1 range up to 41.76 now, and natural gas is trading at $2.81 at the moment, with a range of 8 cents. And that was all for today. Thank you for the time and the attention, and I will see you next time. Goodbye.